Welcome back. Well, the breadth of the market is still positive, and we have a couple of stocks actually that are doing very, very well. One such name that's doing well in today's trading session is the new kid on the block. We have Belrise Industries that listed today. It listed at around 100 rupees, which is a premium of around 9% in comparison to its IPO price. And the last time that I checked, the stock was still trading in the green with a gain of close to around 4%. To help us out with the outlook going ahead, we're joined by Mr. Sumit as well as Mr. Swasthit, who joins us on the show. Hi, gentlemen. Good morning and congratulations to y'all. Recall having a chat with y'all, when the IPO opened up. And it seems the street is extremely excited with this listing because volumes are massive and it's been a good first hour of trade for y'all. Let's get a couple of numbers, though, out of y'all. As y'all promised, before listing that y'all will have the liberty post-listing. So either of y'all can take this question. Sure. Y'all mentioned that y'all have outgrown the industry and y'all are quite optimistic about growth. So tell us what kind of growth can we look forward to FY26 on whatever kind of base that you deliver in FY25 and split it up for us. Throw in some color out there. What could the revenue mix look like and how much of it will come in from exports? Go ahead.
So I think we will not be able to give a particular guidance for FY26, but we feel in a medium term, we want to continue outperforming the industry like we have done over the past 8 years or so. We expect to grow much faster in the industry going ahead. And this will be done through a mix of organic and inorganic. I think organic-wise, we have 3 plants coming up, as we discussed last time. And apart from that, the inorganic acquisitions of H1, which was recently acquired, we feel will have very strong tailwinds going forward. So expect outperformance to the industry to remain the way it has in the past.
What kind of growth are you working with for the industry?
In the two-wheeler industry, we expect, based on CRISIL numbers, we expect it to grow at 7 to 8% CAGR.
And normally you'll outperform by how much? 2 times the industry, 1.5 times? What is it?
I think in different years it's been different. So.
Okay, you know what, Swasthit, I'll try and help you here. Because the last time Sumit joined us with your father as well, he said that over the last 10 years or so, the industry has seen volume growth of almost 1.5%, whereas your revenues have grown by about 10%. Now, volume and revenue are not directly comparable, but if you could give us a sense, if you're expecting the industry revenue to grow by 7 to 8%, then how much higher can you typically grow?
I think going back, I think we will not be giving guidance for the immediate term. I think in the medium term, we expect to outperform the industry considerably.
Your CAGR has been 10%, 10.5%. Do you expect to outgrow that, or do you expect to grow in the same range in the medium term?
We'll be going faster than that.
How much faster?
I guess we'll find out.
Okay, all right. What about exports? That's a part of your business that you would like to grow. It's still very, very minimal. So say in the next 3 years, where does exports as a percentage of the contribution go to? And as you all mentioned, because of this inorganic growth that you all have done, currently the highest amount of dependence is on the two-wheeler space. But you'll gradually start ramping up, the four-wheelers as well as, I think, CV we mentioned the last time around. So what kind of a revenue mix can we look at?
You want to take that?
Sure. So currently we're about 11-12% in the four-wheeler plus commercial vehicle space. So expect to grow, obviously with our significant presence in the two-wheeler industry right now. We believe we can grow faster in the four-wheeler industry, and that's where our future revenues will come.
So from 11%, what is it headed to?
So for 11%, I think it depends on what the complete business also heads to. So it'd be tough to give you a number as to what the mix will be for four-wheelers and commercial vehicles. What we can say with surety is four-wheeler and commercial vehicle will grow much faster as compared to two-wheelers for us as a company going forward.
When you say much faster, is it a multiple or is it a percentage?
It'll be a multiple.
Ideally a multiple, yes.
Ideally a multiple. So suppose 2x, whatever your overall business grows at, this grows at 2x. What does this do to your margins? Because, realizations in four-wheelers are higher. You realize a lot better in terms of the value that you provide there because the overall price of two-wheelers and four-wheelers, four-wheelers and CVs are a lot higher than that of two-wheelers and premiumization too. Your margins in the past have been in that 12 to 14% band. Do you see that increasing to say 14 to 16% and thereafter maybe beyond that higher? Do you all have plans?
So margins-wise, I think we're comfortable at the current margins that we've been. I think last couple of years we've been around that 12.5 to 13% blended EBITDA percentage across all of our businesses, including manufacturing and trading. So I think that's an EBITDA band that we're comfortable with. I think four-wheelers, commercial vehicles may have a potential upside in terms of the EBITDA, but the fundamental challenge over there continues to be volumes across OEMs. So there's a lot of up and down happening between OEMs in the top 7-8 OEMs. So if the volumes do well, there can be a potential upside. But for now, we think we're quite comfortable with the 12.5 to 13% band that we are at right now.
Okay, and exports is a margin accretive business?
Exports is a margin accretive business.
Right.
Okay, and where is that number headed as a percentage of the mix?
We don't have imminent plans for exports to, reach a certain number. I think a lot of it will evolve based on geopolitical situations. For us to give a number before understanding how India is, trading with the world is critical to understand. I think over the next few months there'll be more clarity. Based on that, I think we will further fine-tune our strategy and thus be able to make more informed decisions about what type of geographies we want to work in and what type of customers we want to work with.
Okay.
There's two things I can say. One is we don't have...
Please go ahead.
One, we don't have direct exports to the US, so that allows us to... so the US tariffs don't really affect us directly. And secondly, we have exports to Europe, and this the US, the UK-India FTA that is coming into play will help us to grow in that space as well. So two positives on the export front.
Right. If you could give us this number, and this is something that we had asked of y'all when y'all joined us when the IPO was opening as well. This is just to understand your growth going forward. Is that earlier you had a certain realization per vehicle. Over the last 5 years, how has that increased per vehicle in terms of the product offerings that you all have increased to your clients? And how is that likely to grow? Yes, on the one hand, your growth will be predicated on how the industry grows and how you all get more products coming in for newer vehicles, etc. But how much of your growth will come from you increasing your contribution to the same vehicle going forward?
Correct. So content per vehicle has gone up by a fair bit in the past.
Would you quantify that?
Maybe by close to 40 to 45% over the past 7 to 8 years. Going forward, we have a slew of new product launches or new components that we are offering to our OEMs, including steering columns, some filtration products. We are working a lot with premium vehicle segments in the two-wheeler segment. So we cross almost all of the premium bike makers in the country, and there's a trend towards premiumization that's happening in the past 5 years. People are wanting to spend more on discretionary needs in a two-wheeler. People want to buy a high cc bike that serves a purpose beyond just a necessity. So I think with premiumization, our content per vehicle will also go up because, of course, with premiumization, there is a higher aesthetic quality required on our components, which in general increases content per vehicle. And apart from that, the size and weight of the vehicle, of the components also go up, due to which, again, content per vehicle increases. So a couple of those factors will allow us to continuously increase our content per vehicle going ahead.
All right. So, Sumedh, I'll have to ask you this because you aren't giving us actual numbers. So, hypothetically, the next 100 rupees of sale, if you had to break it up, how much of that would come from the industry growing? How much of that would come from you increasing your, offerings to newer vehicles, say four-wheelers and CVs? How much of that would be via exports, and how much of that would be via, premiumization and contribution per vehicle? If I had to break it up that way.
So we're unable to kind of go into that detail at this point of time. I think it'll be a work in progress as we, increase our content per vehicle, increase the number of OEMs, and increase our exports in the future. I think, the focus remains on outperforming the industry consistently. We've done it in the past as a track record. We'll want to continue doing it consistently in the future also. And as you mentioned, I think the four-wheeler commercial vehicle segment will grow at a multiple as compared to two-wheeler segment going forward.
Okay, all right, gentlemen. Thanks a lot for joining in. Being quite tight-lipped, I would say. But maybe on the next earnings, we remain in hope that, in fact, you'll give us more details. For the time being, enjoy the day, enjoy the evening. It's a great day for you, company. Regards to your father as well, as he was quite passionate when he was talking about the business. Thanks a lot for joining in. Well, time to slip into a short break. On the other side, we'll be joined by the Managing Director of Triveni Engineering. Stay with us.